Something that is often overlooked by many startups is claiming tax relief on the money spent to set up the business before it's ready to start trading. Keep watching to find out more. Hi there, Nicholas Campion here from First Formations, the UK's leading company formation agent. When you set up a new business, you will likely have to spend money on certain goods and services before you are ready to trade. These startup costs, which can include things such as stock and equipment, are known as pre-trading expenses. You can usually claim tax relief on this type of business-related expenditure once you start trading, thus enabling you to reduce the amount of tax that you owe at the end of your first year. In this guide, we explain what pre-trading expenses are, which costs you are able to claim, and how to apply for tax relief on these expenses when your business is up and running. So let's begin with what exactly are pre-trading expenses. Now, they are simply business-related costs that you incur while setting up a business and getting ready to trade. Most small business owners, including limited company directors, pay these startup costs with their own money. Now, the good news is that you can claim tax relief on any pre-trading expenses that you incur wholly and exclusively for the purposes of the trade, profession, or vocation. Whilst a lot of pre-trading expenditure takes place shortly before business operations begin, you can backdate claims up to 7 years prior to the date on which you started trading. These expenses are treated as having occurred on the first day of trading, allowing you to deduct startup costs from your business profits and reducing your corporation tax bill. The types of pre-trading expenses you can offset against your tax bill include legal and accountancy fees, costs of leasing or purchasing business premises, registered office and business address services, stock, equipment and other business supplies, logo design and website design, domain names and web hosting services, business travel, marketing and advertising costs, business insurance, stationery, printing and postage, phone bills, recruiting staff, and uniforms and trade-specific protective clothing. HMRC will class any such business-related costs as legitimate pre-trading expenditures, provided these costs would have then been tax deductible if they were incurred after the business was up and running. Now let's take a look at pre-trading expenses that you cannot claim. Some startup costs do not qualify as pre-trading expenses for tax purposes, including cost of company formation, training courses, business licenses, substantial repairs and improvements to business premises, maintenance costs, professional fines and penalties, and business entertainment. HMRC classes these types of costs as either capital expenditures or revenue expenditures. Capital expenditures are fixed assets that a business uses to generate revenue over a long period. Revenue expenditures relate to short-term, recurring costs incurred during day-to-day operations. Whilst the company formation fee does not qualify as a pre-trading expense, you can reclaim the cost from the company as a director's expense. So far, we have covered what you can and can't claim, but how is VAT treated with pre-trading expenses? If you register your company for VAT, you can reclaim the VAT incurred on any goods bought for business purposes up to 4 years before the date of VAT registration, provided you still have the goods to hand. You can also reclaim VAT paid on business-related services received up to 6 months before the VAT registration date. If there is an element of private ownership attached to any of these goods or services, you're only entitled to recover the percentage of VAT that corresponds with the percentage of business use. Now let's consider the question, when does a business officially start trading? This is important as once you start trading, you are able to claim tax relief on your personal funds that were used to set up the business as pre-trading expenses. The general rule here is that a business officially starts trading when it is in a position to supply the goods or services that it has been set up to provide. For example, trading stock or raw materials have been purchased. And it offers or starts to provide those goods or services to customers. In many cases, it will be fairly obvious. For example, the date that you open the doors to your restaurant or shop, or the date that you launch your e-commerce store. However, most limited companies use the date of incorporation as the date they start trading for tax purposes, even if the business is not yet ready to engage in its planned economic activity. That being said, you may have the option to make your company dormant if the likelihood is that there will be a significant amount of time between the date of company formation and when you start supplying your goods or services. Next up, how to claim pre-trading expenses for your limited company. You can claim pre-trading expenses when you file your first company tax return with HMRC at the end of your accounting period for corporation tax. To do so, you will need to deduct the expenses from the company's total turnover. However, you must keep receipts and accurate records to support your claims and demonstrate that all expenditure was incurred wholly and exclusively for business purposes. You must ensure that these startup costs are paid from your personal funds rather than through a business bank account. Additionally, these purchases should not be made in the company name before it is incorporated at Companies House. When you start trading through your company, you'll be entitled to reimbursement of the personal funds that you use to cover the cost of pre-trade expenditure. The amount of money that you are due should be recorded as a credit in a director's loan account. Thereafter, you can withdraw this money from the business tax-free as and when the company has sufficient funds available. So there you have it. Claiming expenses through a limited company can be complex and confusing, even more so when you add pre-trading expenses into the mix. We recommend seeking specialist help and guidance from an accountant to avoid complications and to ensure all tax relief claims are legitimate and accurate. If you have any questions, please leave them in the comment section below and we'll get straight back to you. And if you are thinking of starting a limited company, we'd love to help you. We offer a variety of company formation packages, all designed to get your business up and running as quickly and as simply as possible. Take a look at firstformations.co.uk, that's 1ST, for all our formation options. In the meantime, be sure to subscribe to our channel to get more tips and advice on limited companies, reporting requirements, tax obligations, and more. We're always happy to help, and we can't wait to hear from you. Until next time, cheerio.